Hey, 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 happy Friday. Happy Financial Freedom Friday. I hope you guys are doing good. Come on in the room. Let me know where you are watching from as you hop on. I want to talk about credit today. And I hope some people are hopping on and can get some good value from this video today. So as you're hopping on, drop where you're watching from, but also share this video with somebody that you think may need this word today. Hello, hello, hello. Welcome, welcome, welcome. Come on in. Um, so, we're talking credit today, guys, and this is a very, very, very important conversation. I know that in the past, I have definitely had some credit issues that hindered me from doing a lot of things. And so I want to get into some nitty gritty today. If you have a pad of paper and a pen nearby, you may want to go ahead and grab that so you can take some notes today. I'm going to be sharing a couple gems with you guys. Also, if you are watching this as a replay, go ahead and drop the word replay in the comment section. Hey, 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 welcome, welcome, welcome. So let's go ahead and get into it. Let's talk about this credit thing. So I believe that the biggest barrier to financial freedom is bad credit and debt. I'm going to rattle off a couple statistics to you. My friends and my business partners are always cracking up at me because they call me statistic queen. But I believe it's important to put some things in perspective, right? And so consumers in the United States owe almost $900 billion in debt. If you have some outstanding debt, drop the word debt in the comment section. All right. Average consumer here in the United States has a credit card debt of about $6,200, right? And then 41% of households carry revolving debt, credit card debt, and the poorest of households carry the highest total debt. Right. So those are just some statistics to get started. I can tell you probably about a decade ago, I couldn't have bought a pot to you know what in, right? As my grandfather used to say. My credit was in the toilet. Anything that I did, if I were able to get someone to extend some credit to me, was at a very, very, very high interest rates. You see, there are many people in this country that are overextended with high balances, that have bad credit, right? And are really probably won't even be able to catch up with those balances due to the continued interest that is accumulating on those balances, right? And then what happens when you have bad credit? You continue to fall deeper and deeper into a hole, into a bad cycle, because not only are you getting hit with high interest rates, right? So you're owing more than you borrowed, but you're paying more for things such as you go try to buy a car. Now your interest rate is 18% for that Toyota Camry versus 3% that someone can walk in and get with good credit. So you're paying double, quadruple in interest on everything that you purchase because of your credit, right? The interest rates are predatory and it just doesn't feel good. As a matter of fact, it hinders you from financial freedom because all of that extra money that you are paying to a bank or to a lender, to a creditor, could be going somewhere else like your savings, right? It could be going somewhere else like an investment account. So it keeps us in this broke cycle. So I want to talk about credit for a little bit, and I'm going to share what may be some basics to some of you all, and it may be new information to some, right? I believe that information is power. And many times, I know when my credit was in the hole, I didn't even want to pull my credit report. I didn't want to see it. I used to say, it doesn't really matter because it's bad, right? Like, I know it's bad. It doesn't really matter, but it does matter. And I think one of the first things you have to do when you are looking to increase and improve your credit is to know where you are starting. You got to be aware of what you're working with. So, what is a credit score, right? A credit score is basically a number that tells potential creditors how risky it may be to do business with you. All right. So the higher the score, the less likelihood of default. The lower the score, the greater the risk. That's how a lender or a creditor looks at you when they are looking at your score. Now, your credit score can range from 300 to 850. There are a number of different credit scoring models out there that were developed by VantageScore and by FICO, but FICO is most commonly used by lenders. So I don't know, if you have a big purchase goal, a major purchase that you are looking to make happen this year, drop what that is in the comment section. Is it a house? Is it a new car? Is it an investment property? Because whatever it is, I guarantee you, when you go to take out a loan, if you're not paying cash for these purchases, the lender is going to most probably be pulling that FICO score, right? So your FICO score is most commonly used by lenders. Now, let me drop something else. Credit Karma. How many of you all have pulled a Credit Karma report before? Right? You're like, it's free. I'm going to go on Credit Karma. Let me just tell you this. Credit Karma is not a credit monitoring site. Credit Karma is a credit marketing and referral site, right? So they purchase the Vantage score model for pennies on a dollar, and they give it to you, right? An accurate score, so they can say, hey, listen, right? Here's your score. You look good for a purchase. You will probably be qualified for this car. You could be qualified for this card. And they show you two different marketing, right, things within that site. Now, let me tell you this. Even if you click to apply for that card because Credit Karma went ahead and told you, hey, you could probably be qualified for this card. Whether you get denied or approved, they are getting $3 to $4 every time somebody goes and pulls their credit with one of their preferred vendor cards, right? Or marketing promos. So just to let you know, I have a good mentor that always says, if you aren't paying for a product, then you are a product. Go ahead and drop caught that if you caught that in the comment section, because if you are not paying for the product, then you are the product. So I wanted to put that out there because number one, those scores aren't accurate. So if you go and you pull your Credit Karma score for free, right, and then you go and you try to purchase a new vehicle or buy a home, you're going to be very, very surprised when that lender pops up and says, hey, this is your score. And it's going to be completely different than the free score that you got. So I want you guys to keep that in mind. Now let's talk about how credit scores are calculated, right? Credit scores are broken up into 5 different categories, right? Payment history is over a third of your credit score, 35%. Your balances, the amounts that you owe, is 30% of your score. The length of credit history, right? So how long have you been paying on accounts? The length of your credit history is about 15%. New credit, this is increase. Anytime you go and you apply for something, whether it's a credit card, try to get credit or money from somewhere, right? A loan, there's an inquiry that is pulled. That's 10%. And then your credit mix is another 10%. So when we say credit mix, what are we talking about? We're talking about, okay, you may have a credit card. Do you have a mortgage, right? Do you have any other installment loans? Do you have any other revolving debt accounts? A lot of people, I've heard a lot of people say, you know what, it's my goal to pay my house off and pay all these cards off, and then I'm going to shut them down and close them out. That's probably the worst thing you can do. Now, I'm not going to say don't pay your house off, but if you don't have a strong credit history and you pay your house off, you don't have anything else to pay for, right? And there is not going to be any way to calculate a credit score if we don't have any credit. I've heard a lot of people talk about closing their cards. I just don't have the discipline. Put them joints up in your cabinet, put them in a drawer. I don't care. But if you have payment history on these cards, do not close them. Let me tell you why. If you take a look at your credit report, how many of you all have pulled your credit this year? Drop a 2 if you've pulled your credit report at the top of this year and you know what you're working with. When you pull your credit report, there is going to be, you're going to see a number of the amount of credit that you've been extended, right? So if you have credit cards with credit lines up to $100,000, $100,000 will be somewhere on that credit report. If you've only used 20,000 of that, great. That's perfect. But the amount of credit that you have available to you is important. Now, if you have $10,000 worth of debt and you go and you close a credit card that might have allowed a $20,000 line, and now you only have a $5,000 or $1,000 line, right? Then the lender's going to look at you like, wow, your debt ratio just increased just by you closing out that account. Not only that, but if it is an account that had long history, right? Because again, the length of your credit history is 15% of your report. It is going to hurt you tremendously. So if you just feel like you have to close a card out, you're no longer using it as, I don't know. I don't know for what reason. I've never closed a card, but make sure you're closing the newest cards, right? And why would somebody close a new card? Really no good reason, because here's what's going to happen. You're going to close those accounts, but you need credit to build a credit score. It's the vicious cycle, right? So then you're going to go and you're going to pull an inquiry, right? You're going to go apply for a card, pull an inquiry, and then it's going to affect your score again. So let's talk about, how do I increase my score? Okay. There may be some people on here that don't have bad credit, but you're looking to increase your score. All right. One of the best ways to increase your score is to decrease utilization. What is your debt utilization? That means that if you have a card that is $1,000, your debt utilization really shouldn't be more than 30%. Say that's all the credit that you have, $1,000 credit line. There should be no more than $300 balance running on that account at all times. I would recommend paying those balances down every month, but if you can't, that balance should not be more than 30% of the credit line available. Does that make sense? So if you want to increase utilization, and say you can't pay your card down, but your credit isn't bad. I was in a situation once where I needed to increase. I wanted to boost my credit score. Because see, here's the thing, guys. Once you start learning all of these hacks, if you're in the space of financial literacy and freedom, and like credit is the thing. I don't know about y'all, but good credit is sexy. I literally obsess over it, okay? I obsess over it. When you get in that space, every little thing that you see, you're going to be like, oh, I can't do this, but I can do this. So let me give you an example. I had a card that had a $40,000 credit line, okay? And I had $20,000 on that card. I couldn't pay the balance off at that time, but I called up my credit card company and I said, hey, I want to see if I can increase my credit line right now. Now, sometimes credit card companies will give you what's called a courtesy increase, all right? You've been here for this amount of years, or you've been paying your card regularly on time. Every 6 months, they'll take a look at that, right? But you can also call your credit card company and ask for one. Now, if they will consider giving you a credit line increase without pulling your credit, all right, without a hard pull, do it. Why? Well, let me tell you what happened. They increased my line because we did pay regularly, right? We were good clients, to $55,000. Now they asked, what do you have going on? I said, we're looking to do some home improvements and some travel in the next few months. Don't tell them you got debt and you just can't pay it off. Tell them something like home improvements. They like to hear that. Oh, that means you're going to be spending more money on your card. Paying more interest is what they have in mind. But I wanted to increase the credit line so I could decrease my utilization, right, until I could pay the balance off. And it worked. My score went up 35 points, just like that. And I didn't pay any balances down. All right. So if you do have decent credit and you've been paying on your cards regularly, you have a good relationship with these creditors, go ahead and give them a call. Make sure that they are not pulling a hard inquiry on your credit before they do it. Ask them that specific question. Is this going to be a soft inquiry or a hard inquiry? Some creditors don't require, they won't require it. They'll look at your history and say they're good. They pay more than the amount every month. But some will, right? Some will be like, COVID times, these creditors are a little scary, like extending more credit, opening up more credit lines is a little scary. So make sure that they're not pulling a hard inquiry on your report, okay? Because that will definitely affect it. Number 2, how do I increase my score? Pay your debt on time. Pay your debt on time. Now, you may be on here and be like, all right, I get that, Adrienne, but my credit is jacked up because I didn't pay my debt on time in the past. Got it. Been there, done that. But what you have right now, make sure you pay on time. I did a post earlier and I was talking about credit, right? Cash is king, but credit is power. Cash is king, but credit it makes conversations. And it's so true. You can affect and improve your credit at any time. It is not a death sentence. I am a example of that. I mean, I can tell you I had credit scores down 515, 520. I didn't even know they got so low, to the point where like I was never worried about credit monitoring or identity theft, all of that stuff, because I was like, don't nobody want my stuff, they can't get nothing with it. So trust me, I've been there. But after I started doing these hacks and realizing, hey, this is not only I won't say easy to manipulate, but when you know what to do, when you know what the heavy points are on your credit score, you can start affecting it immediately. So pay your debt on time, okay? If you are in default on any of your accounts, get current. And get current as soon as possible. You can literally turn your credit around in months. If you have bad credit, you can turn it around in the next year, but you have to start. Pay your debt on time. A missed payment on any account will significantly hurt your score. What are some tools to help with that? Well, auto pay. I know a lot of people don't like, people in their accounts like, I'll just go and pay it when it's due. But human error will have it so that maybe on that day you forget. Maybe on that day you just can't. Maybe on the day the Wi-Fi goes out, you go do something else and then fall asleep, and the next day, your due date was yesterday. I mean, it could be anything. But if you have it on auto pay, if you get paid on the 12th of the month, then make sure that your bills are coming out on the 14th automatically. But make sure they are paid on time, because a missed payment, I don't care how good your credit is, one missed payment can send your credit score down 50 to 75 to 80 points. All right. How do I increase my credit score? Number 3, limit inquiries. Okay. If you have a lot of inquiries on your credit report, you will appear to the creditors as a huge risk. Okay. And that is going to affect your credit significantly. You could lose upwards of 55 points just through inquiries, because it looks as if you are desperately searching for credit, for money, that you're overextended. All right, so limit your inquiries. You can also cut down on your number of inquiries by doing your research first. What do I mean by that? All right, hey, Adrienne, I want to get a new credit card. I need a new credit card, but if you know you have subpar credit, right, you probably already nervous filling out that application, right? When you fill out, how many of you all have filled out a credit card application and you waiting for that little thing to spin, waiting for the approval or denial? Like, it could be either one, right? Been there, done that. But you can go, there are so many different credit blogs where people literally will tell you, hey, this is the average credit score that is required for this Amex, this Chase card, this, that, or the other, right? You also want to be aware of what credit bureau they are pulling from so you can understand, hey, you know, Chase is pulling from Experian. Let me check my Experian real quick and make sure it meets the 650, 675, 700 that's required. Do your research first versus going to apply for all of these cards and you're not even sure if you meet those qualifications, because you will take a hit on your credit score. All right, they're going to see that you have been searching for credit and it'll be an absolute no. Now, where could that be different? All right, boom. You're going to buy a house, all right? Or you're going to apply for a credit card. You know that you need to apply for a card. It might be between Amex or Chase or whatever it is. Do it all in a specific time period. So if you're getting your credit pulled by lenders to get pre-approved for a new home this year, make sure that you have your lenders lined up. You're not like just working with this one to see what they can give you, and then if it doesn't look good, you go find another one and another week passes. Make sure you have all of your service providers lined up. What I would do, I'll be shopping for loans right now. Okay, interest rates are super, super low. And so while you may have a preferred lender you want to work with, what do you say? Just like the doctor, you always want to get a second and maybe third opinion. There may be another broker, lender, or bank that can offer you a lower rate. And 1 point, a half a point, 2 points, especially in this market, is huge. That's the difference between another couple $100,000 on a home that you can buy. You can buy more home for less money. Point being, if you are going to pull your credit for a major purchase, have a number of different lenders lined up on the same day or 2-day period that you're doing it, so you're not extending the inquiries, and it will count one time. All right, that's the only time, kind of like exception you would want to make. All right, so that's inquiries. Limit those. They will hurt you. Okay. A good credit mix. How do I increase my score? This is a good one because I often hear people, like I mentioned earlier, I'm going to pay off my house, I'm going to pay this card off, I'm going to close it up, and all of the things. And I think paying off a mortgage is wonderful. Heck, I want to pay off our mortgage too, right? But if you're paying off your mortgage, please, please, please have a great mix of credit otherwise. Have a good credit score. Because if you pay your mortgage off and you have one credit card, I guarantee you it's going to be a no. Lenders want to see a good mix of financial responsibility on your half. That means how are they handling multiple credit cards? Okay, I see they have an installment loan, a student loan. How are they handling their student loan as well as the mortgage, right? They want to see a mix. And so I would recommend minimum of 3 cards. Doesn't mean you have to use them all regularly. Absolutely don't max them out, but I would recommend a minimum of 3 cards. If you only have one credit card and you have decent credit, I would recommend getting at least another credit card. They want to see that mix of credit, revolving. That's always good to show. If you're in the process of trying to build your credit, you may have to get a secure card. I had to get a secure card when I was building my credit because no one would extend me any credit, and so I got a secure card. You're gonna put money in a savings account, and you're going to be spending out of your own money and paying it back. But the thing is, these companies report to all 3 bureaus every single month, just like an unsecured card. Okay? They don't know whether the card is secured or unsecured credit. And so that is going to help you build some positive credit history in the meantime, in between time. Sometimes you got to take a couple steps back to take a couple steps forward, right? And so, secure card may be for you if you have limited credit history. Maybe you don't have bad credit, but you have limited history and you don't have enough history to be approved for a premium card like an Amex or a Chase Reserve or something of that sort. All right. So consider a secured card as well, because you are going to need to build some credit. Lenders look favorably on long-term accounts. So as I mentioned before, don't close these credit cards up that you've had like for the past 10, 15 years. Just like, cut this thing up. It's paid off. Your credit score is not going to go up because you paid it off and you closed it. I promise you that. Keep the card open, put it in a drawer, put a recurring charge on it, like maybe Netflix or something like that, and then set up auto pay. But do not close that card. Remember, you need a good credit mix, and lenders are going to want to see that you are good financially responsible with handling your bills. If everything is paid off, they're going to say, how do we know if they're good with their money? How do we know if they're responsible? Because they don't have anything to show for it. Okay, you paid your house off and these cars are paid off, but now what? There's no indication of what you are going to do with the money that they extend to you. Does that make sense? Yes or yes? Put a yes in the comment section. Let me know if y'all still alive. And then last but not least, how do I improve my credit score? I talked about this just now, but build good credit, right? So you're going to need to grab a secure card, or if you have decent credit, go ahead and get another card. Get another card. That's how I started increasing. Once I was able to come out of secure card world, I started getting unsecured cards and being very, very responsible with them. Right? It's like I had to start over. Like before I went to Howard, we were on Howard's campus, and the first year, these credit card companies are out on campus, and they're like, free card, 18-year-olds, freshmen at college, MBNA. I don't even know if MBNA is still around. Maybe they got acquired by somebody, but neither here nor there. I got this credit card, y'all. I remember the credit card got sent to the permanent address, which was my parents' house. And so I went home for Thanksgiving, and my dad said, hey, you got a card. And I was like, all right, great. And he was like, we got to talk about this. But guess what? The talk never happened, okay? The talk never happened. So what happened is Adrian went and grabbed that card before I headed to Cincinnati Airport to go back to D.C., and I ran that thing up, guys. Ran that thing up and ran my credit down. So once I was able to start rebuilding, I rebuilt my credit fast. I went from the 500s to the 700s like within a year, and then 700 to 800. I don't know. I was in the 700s for a while. This 800 club thing is new for me, but you can't be afraid of the credit. You can't be afraid of credit mixes, and you got to make sure that if you're using these cards, you're paying them off. So my recommendation, use your card and make sure you're only charging what you have in your bank account, right? Don't give these banks any extra money on interest, okay? Don't give them any extra money on interest. They are already using us. From your checking account to your savings accounts, they go and they invest our money and make quadruple returns on it and give us basically pennies back in return, if anything. Same with credit cards. Don't give them any money in interest, but make sure you pay that card off before the statement date. Now, last but not least, errors, deletions. Is there anything on my credit report that can come off? Absolutely. Over 85% of Americans have errors on their credit report. If you were looking at your credit report right now, you would probably spot some. So what is an error? An error on a credit report could be anything from your middle initial and your personal information being wrong to your name being spelled wrong. For instance, my name is spelled Adrienne. Okay? My name has been spelled Adrian on my credit report. Well, when Adrian McGrady showed up on my credit report and was attached to a derogatory account, what happened? Had to be deleted. Why? Because it was reported in error. Anything that is on your credit report, I don't care if it's wrong name, if it is the wrong balance, if you had a charge off that still has a balance, anything that's reported in error, last name, middle initial, balance, last date paid, it has to be verified. It has to be the information has to be investigated, and they have to show you proof. Okay, the law says that it is on the credit bureaus and these creditors to show you how and why this information is on your credit report. Goes for collection agencies. There are people probably collecting on some stuff on you that can't even be collected anymore. There are statute of limitations in every single state, guys, every single state that say, hey, this is the amount of time that you can even collect on this debt. Why are you coming for me 10 years later? It's illegal. It has to be deleted. So 85% of Americans have an error on the report. I can guarantee you 85% of the people watching this video right now have an error on your report. It can legally be removed. Okay? So let me just give you a tip. There are, you can go on Experian and Equifax and TransUnion. I know you can dispute online. Never dispute your credit online. Never do those online investigations because you relinquish so many rights as a consumer, okay? The creditors, the credit bureaus have 30 days to get back with you on verification and validation of your debt and of the things they are saying are yours, okay? When we go and we submit because, oh, this is convenient, it's going to get to them quicker, my request is going to get to them quicker, it hurts us as a consumer. They get the information quicker, okay? And then they can get back with you online, right? Because you just opened up that portal. And not only do they not fully verify everything, but there's also no paper trail. So I would recommend, if you are going to dispute anything on your credit report, to write letters. Send directly to all three bureaus and the creditors. Write the letter, have a paper trail for that first dispute. You also want to make sure that you send it certified mail. Make sure that they got it. But it is on them to prove to you that you owe it, okay? And that is how you can legally remove items on your credit report. So if you haven't pulled your credit this year, let me tell you what I do. So once I finally got good credit, I got credit monitoring. I've had credit monitoring and identity theft protection for probably over 10 years. Because number one, once you have good credit, you are going to do everything. You should be doing everything you can do to keep the good credit, right? So like I said, when my credit was bad, I didn't care. I didn't have no credit monitoring. I didn't need them to send me something every month that said my credit score was 500. Like, I didn't even want to see it. But when you have good credit, you want to protect it, and you also want to know what is going on your report. If you don't have eyes on your report on a monthly basis, how do you know what's happening? It could be a collection that pops up on there. Somebody could erroneously report anything, and you don't know likely until you go apply for some credit, correct? So I would recommend credit monitoring all day long, and even during your repair process, because you want to know, how are things coming off of my credit report and how am I improving? So if you haven't pulled your credit this year, I would highly recommend it. I actually have a link you can pull your FICO score for $1, all 3 credit reports, to just take a look. It's a trial period. If you would like access to that link, drop a 1 in the comment section. And I'm also going to drop a quick ebook. It's 101 ways to improve your credit score. I think it'll be helpful for somebody that is looking to improve their credit this year on their own. I saw people wanting to buy cars, houses this year. That's what's up, right? Many times, the thing that is holding us back is our credit. Now, let me just drop one more thing before I hop off. When you get your credit lit, when you get your credit right, guys, hold on to it. I went through that cycle too, right? Because I knew exactly what to do to fix my credit, but because my money habits weren't right and my mindset wasn't there in terms of my priorities, I fell back into being overextended. When you're overextended, what happens? You max out your balances, credit score goes up. I worked in an industry where we got bonuses, right? Once a year in the hospitality industry and sales. And so when I got my bonuses, I pay the credit card off, credit score go up. I go buy something, run some more credit up, or get behind in payment, credit score go down. I knew exactly what to do. I knew how to delete stuff from my credit report, but my mind, I needed that money shift. So while you are increasing and improving your credit profiles, also increase and improve your financial literacy, right? Think about, what are you going to do with all this extra money that you're paying in interest and service, right, on these cards? Once it's paid off and you get in that 700 club, what are you going to do with all this extra interest? Are you going to invest, right? Once that debt gets paid down, are you going to invest that money, right? Start thinking that way. And when I started shifting how I was thinking about money, credit and cash becomes a dangerous, in a good way, powerful thing, because you got good credit and you got cash. You got options. Okay, so I hope this helps somebody. I'm going to drop the link for the 101 ways to improve your credit in the comment section. If you drop the one for the link for the credit score, so you can assess where you are right now, which is what I highly recommend. I don't care if it's 400. You need to face it so you can look at what you need to fix. I will send you an inbox. All right. So if you got some value from this, drop me some jazz hands or something and share this video with someone that you feel like may need this information. I hope you guys have a great rest of your day. I'll talk to you soon.